2007, barring the month-long freak out that occurred in March of 2020, which is the beginning of COVID. However, this time around, a small group of names account for much of the declines, prompting some discussion in the investment community about their influence and power. Only 8 companies of the index of the 500 are responsible for nearly half of the weighted benchmarks year-to-date losses. Declines in Netflix reached 70%, Facebook, Nvidia each are down 43%, while Microsoft, Apple, Amazon, Alphabet, Google, Tesla have fallen between 23 and 36% year-to-date. Under a theoretical model of the Dow Jones indices, designed an equal weighting to an entire S&P market, the index would only be down 13% in 22. But the investors would also have experienced some massive gains they notched in previous years. They would not have experienced massive gains. So basically, they're saying that the S&P, the index, is down mostly because of those stocks that we mentioned. They're taking a huge chunk out of the S&P return, said a senior analyst. Well, that makes sense, actually. I mean, oil stocks, energy stocks, oil stocks have been supporting the market. The S&Ps, ExxonMobil, Chevron, and Conoco have been supporting S&Ps this year. Commodities and related shares have been used as an inflation hedge, especially in Russia's war in Ukraine, exacerbating energy prices globally. Dip buyers should also be on the watch, according to some other analysts who feels big tech will continue to provide the infrastructure or the backbone for digital economy and do really well for many, many years going forward. Yeah, okay. All right, so there, Don, you should be happy now, right? Got out of the blue band. See, the blue band is still saved you, even though you were unhappy for a second there. Should be happy now.
Yeah, what do they say? The alligators have left the building.
Wow, look at you. Remembering Presley.
Okay, Mark, where's it going now?
Now he's flat. Now he's flat. So
I need another one.
Boy, I tell you, the inflection of your voice has totally changed, by the way, Don.
I know. He's happy.
I got all my paperwork done.
Funny. That's so we're coming back down here again. Be a little bit careful. We got down to 19 there, so the 16 area here, a little bit tenuous maybe. So be careful around that area if you're going to take it. Maybe trade a little bit smaller. A red band is the outer bands of the Bollinger Bands. They are not something that I even consider, but if you put up a Bollinger Band, they give you the red bands as a bonus that don't make any sense whatsoever. So I just leave it on for color. How's that? That's how much I care about the red bands. I
colored mine white, so I don't see them.
So they're just there for color, so my charts don't look so boring. So ignore the red bands. Right. Oh, no worries there.
Okay, Mark, are we going back to that 40? I need a trade quick.
Kind of hoping for going back down to the 19.
Well, the good thing is one of us will be right. We got it covered.
You put some in for me, and I'll put some in for you.
There you go.
Happy family. Well, let's. I mean, I'm hoping that this stuff slows down a little bit because it is just nuts. They're nuts. These trades are nuts, but they don't look like it's going to be slowing down anytime soon. So
VIX is only at 28.
I know, because they're not like that big drop on Wednesday had to be one of the calmest 140 S&P point drops, or 170. It was a huge number. One of the calmest 170 S&P point drops ever. It was just slow, monotonous, down ticking, hardly any rallies. It was strange to actually see, because that doesn't usually happen on breaks like that.
Or, no offense, but I hope they let it go back up to the 40s before they let it go to 19.
We are, we can see here over the last few hours a little bit of a range. So I don't know if we're going to stay in this range or not. At some point, we've got to consolidate here just a little bit. I would think. I would think that the market is trying to find that area consolidation. Of course, it's on the lows here, and close to that 20% bear market label that the market likes to give, that everybody's talking about. But we'll see. Again, if anybody has any questions, feel free to ask in the chat. You can ask them of any one of us. Mark and Don have taken our course and have been with me for quite a while here, and so they are definitely able to answer any questions that you might have in regards to anything that we do.
Hey, Sal, some reporter on Monday came out and said that the S&P 500 as of this year has lost $7 trillion in market cap. Can you believe that? So
yeah, for sure.
I mean,
sure.
Do you think that's because, I mean, I'm sure a lot of the big hedge funds and people have already been, taking profits, but I mean, what are your thoughts? Do you think this is the beginning of a bear market, or we already in one?
Yeah, I think we're in one already. Just because there's a classification of a 20% indication doesn't mean that it's we're not in a bear market. Look, you also got to remember one thing. If you look at the valuation, they were comparing the valuations of the previous other bear markets. Like we lost $3 trillion in the .com one in 2000, and you lost another $3 billion or trillion in the financial one, right?
Yeah.
But if you look at where the index was at those times, the index was at 1,000, 1,200, 1,500, 1,800, right? We are double that as far as valuation is concerned. So technically, the valuations of all these stocks have doubled. So the 3 trillion that they were talking about, you lost in 2000 and 2008 when that bear market happened, the stock market went into a sell-off. Well, the valuation of those stocks were probably half as much. So if you lose $7 trillion, even though it sounds like a big number, as far as compared to the other bear markets, or how much money you've lost in those bear markets, it's kind of equivalent. They're making it seem like, oh, we lost so much more money in this market, but the reality of it is, the valuations of those companies have probably basically doubled, because the valuation at S&P is twice as much as where it used to be.
Right.
So it's, you have to read into those numbers. They make it sound like this right now, this bear market is so bad, but you're also starting from such a high level that it should be bad. If you're going to compare numbers, if you compare them on an equal basis, it's probably the same. So, you get fooled. These people throw these big quotes on you, and the numbers are bad, and they're. I mean, everybody. You heard the stocks. All the big stocks are down a lot, and people. A lot of people own those stocks, and they're getting hurt by them. Some of these big institutions also own some of these stocks, and they probably have to get out of them because they have to look good on their balance sheet. They probably had a lot of profit in them already. So they were just, they just don't want to be caught with it. But at the end of the day, technology is still going to come back, and we need technology because that's where this world is going, and that's not going to stop. I mean, you got this. At the end, Facebook's not going to go away, and neither is Twitter, and neither is Instagram. It's just a matter of how they monetize it and make money. Look, when it first opened up on Google, I mean, Amazon's not going anywhere.
Yeah.
I mean, they're amazing. I mean, what they've done. I mean, they're just keep getting
Bigger.
yeah, and they're getting into every aspect of the world. So yeah, I mean, even though the stock's been pummeled, you gotta long term. They're going to be on their highs again at some point. It's when, obviously, is the question, but we haven't had a break like this in a long time, and so if people have money, this is probably a good time to buy some stocks, because I think in about 5 years from now, all of these stocks will probably be a lot higher. That's my own opinion. What do I know?
So how do they use that data? They say that, in a lot of these big stocks that there's more, from the options market, there's more, the put volume is a lot larger than the call volume. So I guess, is that how they use, that it's going to be more of a bear market right now than,
Well, they like to use those indicators to give you some ideas of where the markets are going to go. So they look at the options market and see where the players are, because if you think about it, some of these big institutions are going to hedge their positions with options, right? So if they're hedging a long position in the stocks, you got to buy puts, right?
Oh, I see. That's right.
So that's why the put volume on these, whatever put volume is, it's going to be higher because they're hedging themselves. I mean, the options market is just a hedging tool. And just like the futures market is a hedging tool for mortgage rates, interest rates, and grain markets, and this and that. So they're just hedging tools to be able to help with the fluctuations in the market. That's all they are. So obviously, if the markets are going down, your put output is going to be a lot higher, because everybody's just covering their ass is basically what they're doing. Oh, I mean, these guys are just, these people, some of these big institutions who are trading stock, they're just too smart. They got, they know how to cover their butts more than anything. Now they're still going to lose a little bit of money, but they're not going to lose, a whole bunch, not as much as the market is. I mean, those are the ones that know how to make sure that they stay within their parameters of risk. And very smart people. Some of these big funds are run by a lot of computers who know how to hedge it. Yeah. But then they had to put in those parameters in the programs to be able to help them. So yeah, no, but that's why you get the put volume higher. And usually when you get the put volume exceeding the call volume by like 70 to 80%, it usually means it's the end of the bear market.
Oh, really? Okay.
Yeah, right. So right now, obviously, nobody's buying calls. I mean, right? Who's going to go buy a call right now?
Right.
You know what I'm saying?
Don and his algorithms.
Right. I mean, unless you buy, out of the money long. I forgot the name of those calls that they use that are like 10 years ahead, 10 years in front, but you pay a lot of premium for the time value.
Leaps.
Yeah.
Leaps. Thank you. I knew Don would be on top of this. He's buying all the leaps in the call leaps in the world right now.
Don's leaping.
As I'm standing watching him alligator circle.
Yeah. So that's what. Again, the valuation number with you're going to see. Oh, we lost $7 trillion. Crazy stuff. Yeah, but also you got to remember that where the market started from, you know, the bigger they are, the harder they fall, right?
Right. I've just heard so many people complaining about their 401ks, like family members and friends and stuff like that. I feel so bad. It's like, you know, especially for those people who are trying to retire this year and now their 401ks have, you know, gone to almost nothing, seems like.
Yeah, no, yeah, it is pathetic. It's hard to, you can't look at it anyway. I mean, it's depressing. But you know, nobody was complaining when it was going up every day.
Right, exactly.
You know, unfortunately, you know what they say, you know, what goes up must come down, right?
Yep.
Except it wasn't going down for the last 10 years or 20, 15 years because everybody was giddy with the 0% interest rates since 2007, 8. When they put it down to 0% interest rates, the money was free. All right. The stock, the companies were basically doing whatever they wanted to do. Basically what happened is that all that free money is roosting this break here. You know, and then tax breaks that Trump made to these companies, all they did was buy back their stocks, which increased their valuation. And you know, a lot of them just bought their stocks back. They didn't do anything else with the money, so valuations of the stocks went up. And now you got geopolitical situation, you got economic situations, you got COVID. All these things is almost like the perfect storm that's coming all at one time. That's creating some, you know, craziness in the world, and thusly creating the craziness here in the S&Ps and stocks. You know, we were talking about, you know, when the market was trading at 4,500, I kept saying, I don't know why the market's up here. I mean, it doesn't make any sense. You know, I mean, you know, it's not like I went and sold all my stocks, right? Because it's not I'm not, that's why I'm not in and out of stocks all the time. But, you know, it didn't, the other problem is even if I knew where the market's going, and sometimes you even know where the market's going, you can't even stay in that position because it just, these markets are so, movement is so crazy. You get a 1% move in the S&Ps, you know, that's a lot. And it's a lot to have a stop in there. It's a lot to, you know, unless you're, you know, you get a 170 point move in the middle of that 170 point move, you're getting 50 or 30 point rotations in the opposite direction. So even if the hardest part of trading is even sometimes when you know where the market's going, it always like snakes you out of the position. I mean, I could tell you how many days I was trading sometimes in the pit, and I knew where the market was going. I knew we were going up or down, and I would lose money.
Yep.
I mean, it just doesn't matter. It just doesn't matter. I mean, it's what happens with traders. And at the end of the day, you look at it and you're like, God damn, all I need to do is get a one lot on and I'd be up all this money. Yeah, okay. Try it. Try to put that one lot on if you know which direction it's going, and see how, if you watch it all day, you're going to at some point bail out of them because it's just, the market's going to get you out. Whatever position you have on, it's just the nature of the beast. Oh, well, we're definitely range bound here, bouncing off of that blue band very nicely. Again, I would not mind the market taking a breather. As soon as I say that, it probably won't. Every time I gave you new numbers last week, the market reversed. That was kind of funny. I was like making some great calls.
Can you give us some numbers on the downside? I need it to go up.
But so that's where we're at with all this talk these days about everything. It's kind of, it's tough. I mean, all my friends too, you know, they're looking at their stock portfolios, and I go, my best advice is just don't look.
Don't open the envelope when it comes.
Don't look. The only thing I will say that if they have, of course, the flip side to that, as soon as I say, well, if you have money, you should buy some, because you know you should get. Well, my money, I just lost it all. I'm like, oh, yeah. Okay. I'm like, okay, then just don't look. I mean, it's depressing. It really is. You open up the, that thing on your app and all your stocks are all red. You're like, oh God. I'm like, okay, I'm not going to do that again. It's bad enough the market's down, and if I'm not losing money that day in the market, I'm like, oh, I'm not going to do that. Double whammy. All right, we're a little range bound here. It's a little bit, looks like it's under a little bit of pressure, but I don't know. Like I said, I really wouldn't mind it being in a little bit of a range, but maybe that market needs to be a little bit of a range. Maybe some of this needs to be in a range for a couple days so things will settle down. All right, coming back down here, be a little bit careful there around the 16 for reasons we talked about earlier.
Let's see. Where bad.
Right, market just kind of coming down here to the 16 area now. So, like I said, be careful there. And when it comes down quick. Doesn't beat around the bush. We talked about it being a little bit volatile right in here, so be a little bit careful. There's a reason that you shouldn't be trading the level. And probably looking at the 09 level next. Exactly, Pat. You can't. It's very tough to look at your stock portfolio every day. Can't. Again, we suggested against trading the 16 area for reasons we talked about. So now the market's rotating down, looking at the 09 level next. Yeah, coming down here to the 09 really quickly. That's our next little level of support, or not, I don't know, but make sure you keep your stop in place. Okay, we're working this 09 area now. I mean, these moves happen like who knows why. They just happen. And got to make sure you keep your stop in place as it's kind of hanging right in here, trying to see where it wants to go. Again, if anybody has any questions, feel free to ask in the chat. And we're just kind of hanging around this 09.
That 9 should have bounced that sucker.
It's trying. It got down to 7, and then now it's holding. 7 there, kind of hanging around that 7 for a bit there, and then coming back up here. It's trying. Well, at least we found an area that the market is just hanging around trading, so it makes sense. It's just, are we going to get an opportunity to make a little bit of money is the only question. But definitely giving you a chance here to scratch it or make a little bit on it. Cover your cost if you don't like the price action the way it's been hanging here for the last couple minutes. So
I was looking to see at least 15 out of that sucker.
you would think, but you know, right now, you know, it's just being stubborn. But again, if you don't like the price action, give you a chance to get out of some, maybe scratch some, keeping a little bit left over, depending on how many contracts you're trading. Definitely options that you have. Definitely suggested options these days. All right, again, working this 9. If you haven't gotten out, it's definitely telling you here. I'm giving you a chance to get out of some if you don't like it. And just keep a little bit on if you like the area and want to trade it. But again, it's one of those things that at least it's hanging here for us. It's not running away. So take it for what it's worth.
It touched my 5, but it didn't get a fill. There you go, figure.
Well, we're just kind of hanging again right around this 9. Giving you choices here. So we do have a time factor here that if we were into a trade and we got in for so long, you don't like it, you definitely have choices. You don't have to wait till you get stopped. Getting a little bit of rotation here. Finally, again, they got a 500 lot there. Oh, they took it out and oh, thanks a lot. They took the 500 lot. How's that guy who just bought the 500 feel? Wow.
Probably pretty good if that was his out.
I mean, somebody bought him.
Yeah.
I mean, somebody bought him. I mean, wow. Somebody bought him and then they break at 5 points. Wow, that's amazing. That is amazing. We definitely could have put in a couple orders there underneath it just in case. But I didn't think it would do this. Jeez. Market never surprises me. Never stops to surprise me. That's for sure. Amazing.
Let's
right.
go.
It's trying. It's trying.
You know, just give me 15 and I'll be happy. Hey, dog.
Yeah, it's being stubborn.
There we go.
Just in case you couldn't tell, it got really quiet here in the room.
I'm feeling it.
It did, yeah.
Wonder what positions you guys have. I don't know.
Let's go, you dog.
All of a sudden, you guys are just stop yapping away.
No one's happy anymore.
Now they're happier now.
Oh, yeah.
Yeah. All right, now we're getting this rotation here. Got 5 points. It just went down to 05 and popped back up. So hopefully we're able to stay with the trade. We had 09 as support there. So we're talking 5 point stops. We did not get stopped out there, and we get a nice rotation here off of the 09. But again, if you have trading multiple contracts and you got out of some, you left a little bit for this rotation, that's great. If you're trading if you're trading smaller and you got out for a scratch or a little bit, that's fine too. Definitely shouldn't have lost any money on the trade. It's either scratch or a little bit, or your 5 points. So all depends on what your risk tolerances are and how you want to manage those trades, especially since we were down there for a good 10 minutes. But hopefully, one of those scenarios kind of worked out for some of you or all of you. Can you guys take care of this for a little bit? I have to go upstairs and take care of some guys up here. I have to cut some trees down. I gotta go talk to them.
Sure.
So you guys good for a bit? Can you handle now that you up money again?
The fast pace.
Now that you can breathe again? Now that you're all happy again? All right, we'll get back here. And I'll get back in a bit. These guys will hang
Keep
in
you
there with you.
retained.
Yeah. So we got you know what? I'm going to give you some more levels on the downside just because we got 09. Then next level on the downside is 38.98. And we have 90. And then we got 82, 72, and 59. 82, 72, and 59. And there, wow, that is, Don, you can't do it that fast.
Fast.
I mean, he's got him in there right away. If you can repeat those levels.
Oh, no, I got to write mine down on my log. Then I put them on the computer.
I mean, the man's got it down to a science here. As soon as I spit them out of my mouth, they're up there. I'm like, whoa, that's impressive. Can you show them again?
1 second.
Thanks. I'll get back in. I'll be back in a little bit.
Okay, Mark, where are we going now? down to 7.
Back to bed.
Back to bed. Oh, come on. I'm really surprised we didn't get down to 7.
I hate Fridays sometimes.
I mean, to me, an orderly market would be down to 7, back to that 14, 15 area. Well, yesterday the market was working really nice.
Yeah, it seemed like everything worked pretty good.
This usually we get about one day a week that the thing just works like it's supposed. I say like it's supposed to, like I think it should, and the rest of the time I stay in the dark. There we go.
Come on, keep coming.
Now I can get filled on my 5.
Oh, I got a technical question for you, Don. On the Ninja, I've got a bunch of on the top part of the screen. It's got all the writing. It like displays like the
Yeah, like
EMA and
all that, and it just closes it up.
Yeah,
You can get rid of it.
How do you get rid of it?
You have to do like I do. I called Ninja. I didn't call Ninja Trader. I sent them an email. You go to help on in your what do they call a goofy thing?
I did that.
Yeah, the guide down there where all your buys and sells are. But you know where you shut it down at, where connections and stuff like that. Anyway, you go over to help, and you go over to email support, and you type it in, and just type in, how do I get rid of all this stuff in the top of my chart? And they'll send you a little email back.
Yeah.
Then you can tell me how they did it, because I forgot. I undid mine, and I got one over there I need to undo again. Let's see, how did I do this? It's real simple.
I did that, and they sent me a link that it didn't work. It clear logs or something like that, and they said go to indicators and click on the display.
Oh, okay. Hold on. Let me see. Let's see. We go to indicator. Okay. Let's see. How did I do that? Okay, you click on display and you do what now?
He says all the stuff that's on there, but I mean, I look at it and it's like it doesn't seem right. What he told me, he says just make sure everything's blank.
Let me go over here and look at the ones that I've gotten rid of, and maybe they can tell me what I'm looking at. Okay, indicators. Indicator. Hmm.
Yeah, I'll call those guys and see if they can walk me through it.
Yeah, it's real simple, but I forgot how to do it. I did it. That was it.
And it got rid of everything up there?
Well, you got to do one for each every indicator that you have on there that you don't want to see up there. You have to go back in and
Oh, I see. Okay.
oh, okay, hold on. Where? Let's see. I think that's what it is. Well, I didn't get rid of anything. Okay. Oh, hold on, man. Here I am making money, and yeah, thank you, Lord. Man, I looked up. I says, "Oh, it's past my target. Time for me to get out." Oh, I got to figure this out too because I've got one that I want to get rid of. Uh, read their email says, okay, you go down to indicators and you get into indicator
Hold on, let me see if I can pull the email up for you.
and you go down to
Let's see. Okay, here it is. It said to remove this information, please right click on the chart, select indicators, and remove the text within the label field. It says remove the text within the label field.
all right, let me try this again. We go to the chart, we right click on it, we select indicators.
And then go to the, and whatever
and-
text is in the label field, it says remove it.
Let's see, label. That's set up there. Okay, I think I got it figured out now. Okay, what you do is you go down to you get into indicators and you highlight the indicator that you want to remove.
Mm-hmm.
And
Oh, there it goes. I got it. Yeah. Where it says label, just remove the EMA.
Yeah.
Apply. There it goes. Oh, yeah. That worked.
There we go. Figured it out. Excellent.
Much nicer.
Yeah, that's just more clutter on my charts.
Oh, no, I'm going to make hundreds of thousands of dollars more.
It, yeah. Oh, thankful to get out of that little trade. Now we got to come all the way back down to that 02 area. Well, have you recuperated from Legoland yet?
That was actually fun. The kids had a blast. So that's,
It's a neat place from what I hear. The grandkids have been there. I've never been.
Yeah, it was interesting.
Guys, we're just sitting here chit chatting. If y'all got any questions, feel free to ask. Well, Saul's not here. We can tell you. We can give away the store.
Yeah, exactly. Give you the keys to the kingdom.
That's it. Mark can tell you where Legoland's at.
Yeah.
I don't even know. Let's see. We had a level at 9. My Bollinger Band on my daily is sitting at 38.42. And I think our high was what, 48.01, somewhere in there.
Yeah.
And if 20% would have been 38.41. So if we come down and hit that Bollinger Band, we will have gone. And I saw something the other day I found interesting is somebody says we can go another 28% lower.
Dang.
I'm going, man, that's going to take us down into that 2,000 to 3,000 range. That's going to be real interesting. I guess they're going to fill that gap that I lost so much money on years ago. And Saul's right. I mean, there's a lot of times you can know where the market goes, but it'll start that direction, then it pulls back against you, then you start thinking, look, I may